Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. We're counting down to the next VRIC, January 21st and 22nd, 2024 at the Vancouver Convention Center. Do stay tuned. When tickets are available, I will be the first to let you guys know. But for now, we're keeping the channel rolling with some great guests for you guys. And today's guest is the renowned precious metals analyst, the founder of the Morgan Report, and the author of the Silver Manifesto. It's David Morgan. Always great to talk with you.
Jesse, it's been a while. Thank you for having me on the show.
Yes, welcome back. And since it has been a while since we chatted, I wanted to start with a more broad overview on your end of the precious metals market, starting with silver. So, how do you see silver positioned, and what are the main catalysts for higher prices here in 2023? And if there's any challenges that you think you see silver facing, maybe let us know about that too.
Sure, you gave me the hard one. I was going to start with gold because it makes the foundation for silver. But you have silver. So silver is lagging gold, but in a way, it's also catching up, which is a contradictory statement. But silver was down the 18 level for a while, and now it's up around the 25 level. And so if you look at it on the last couple of months, silver's actually outperformed gold on a percentage basis. But gold's been the big leader. So are there any roadblocks to silver? Well, there's always been a roadblock to silver, and that is several things. One is that it's not considered a monetary metal by the establishment. That's huge. So, going back to the first time I gave the lecture, What If Silver Were Treated Like Gold, that I gave at the VRIC a few years ago, talking about, well, what if silver was a monetary metal? And of course, if you take that thesis, you can discover for yourself that it'd be a lot higher price in paper terms, because both gold and silver had a ratio of about 20 to 1 or lower for over 4,500 years, when they both had the same exact function, and that was money. So it's pretty obvious from all the years of recorded history that silver's actual highest performance is when it's money alone, not when it's a money and an industrial commodity. There's a lot of reasons for that. I mean, the roadblock, you're getting me on a rabbit trail here. I'm going to put myself on a rabbit trail, but you can go into why did the Silver Users Association develop? You could go into some of the early work of Charles Savoy and all of his research on the silver stealers. I mean, there's a lot to it. Coming back to gold, gold is the establishment money of last resort. They don't talk about it much, but as I said, about 6-7 months ago, the gold run has begun. And there are people that follow me, that trust me and believe me. And it was a bit of a conjecture because it really was a forward-looking statement. But it turned out to be true. And the reason we know that is because of the latest data that the central banks have bought more gold in recent times than they have in the last 40 or 50 years. And then the first quarter of this year, they're on track at that same pace. And the other part, of course, is what's really in the news, and that is this Chinese renminbi to gold conversion. And I'll backtrack there a little bit on a rabbit trail. I mean, the first one that actually came out with the gold yuan idea was Michael Rupert. From the wilderness. He's long deceased, very bright mind and very good researcher. And I tagged on that. I gave him credit, of course, but he saw that there would be a day when the Chinese currency might be or could be or would be convertible to gold. So gold is doing exactly what it should at this point in time. It's certainly been disappointing if you do the math of what the theoretical paper price of gold will be. But it is breaking out here. Once it breaks out and starts to make a new high in US dollar terms, it's certainly broken out in many other currencies. But once it breaks out in the almighty dollar, then we're off to the races. So that means it goes parabolic from that point forward? No. But we will get a new base built somewhere, 2,200, 2,500, I don't know. And this will bring in a lot of not only algorithmic trading that bases itself on momentum and new highs, but also the public will wake up and the mainstream press will have to acknowledge that gold's hitting a new high. So I think we're quite bullish. I know I brought a lot of gold into the discussion, but silver and gold are still highly correlated. They both have monetary aspects, and gold's leading. I think the bottom line, if you don't hear anything else I'm saying, gold will lead silver this time.
How much credence do you give to the talk of a BRICS nation's currency potentially backed by gold? Some are saying potentially backed by a basket of commodities. You've got some people, shouting that this is going to be the death of the dollar. Other people take a more measured approach and say that, if this occurs, it's going to be very far away from ever being released and adopted. How do you see the emergence of a potential BRICS nations currency playing out?
I don't see it happening, or certainly not in a way that a lot of my peer group would state. I'm pretty much adhere to what Martin Armstrong has stated. I mean, the whole system is based on credit, and the way to have credit is to have a huge base of debt or monetary instruments, and that's the U.S. Treasury market, be it T-bills, T-bonds, or T-notes. It's all about who controls the system, and the system's still controlled by the dollar. Yeah, like 60% of the transactions, I don't know, 10 years ago, now it's only 48% or something. Yes, the dollar is being used less than it was, but for another nation state to come up and take over, they've got to have an advanced capital system, which means they have to have an advanced debt market that everybody trusts. And that isn't in the cards yet. So if you don't have a bond market, you really don't have the ability to switch into currencies. You could, and it's possible that if we see China taking a lead and going to gold, like I mentioned a moment ago, and then doing it as a gold-backed bond, now you have a new creation that's trusted by the system, even trusted by the bankers, because the bankers all know it's a sham, or most of the top-tier bankers know it's a sham. So that could be the direction it's going. So I want to kind of, keep my mind open and not, oh, well, they're wrong or right. I don't like the right-wrong argument. I like to make the statement and think through it and let people decide for themselves. But I'm not an adherent to a BRICS currency.
So I'd like to get your thoughts on the banking crisis in the US. We're seeing regional banks fail. This is, for one, driving deposits into the too big to fail banks, as well as seeing more people take their money out of the banks, put them into treasuries to try to get a yield. This is potentially fueling the collapse of further banks to come. A lot of people are speculating. And some people are saying this is all by design, to take the conspiracy theory route with it, that the US government wants to consolidate capital into a handful of banks that it can have control over, potentially use this to roll out a CBDC or just to consolidate power overall. So what's your take on those theories, and how do you think this all plays out?
Well, there's somewhere between 4,600 and 4,800 regional banks in the United States. There's a good article published. I give him credit. I can't remember the name. I just read it during my insomnia speed. But about he claims that he made a good argument that maybe 50% of those could go down. And does that mean that it's so that proves that there'll be a now will that happen or not? I don't know. But all these banks are insolvent. I mean, if we just step back and look at a different question and say, well, is there solvency or not? Well, if you're on a fractional reserve system and there's roughly $1 for every 10 that's loaned out, and everybody that's supposedly deposited their money into the bank comes and gets it, there's only $1 in reserve for every 10 that's supposedly there. So every one of them is insolvent. The situation is that's how the system is set up. And very, very rarely, if ever, does that happen where there's a bank run, where people come in and say, well, give me my deposit all at the same time. The general scheme of things, it's 1 out of 10 or 1 out of 20 or 1 out of 30. So the system works just fine because the demand is so low relative to the deposit ratio. So coming back to what you said, I think there'll be much more bank failures. I think there is a consolidation, whether it's by design or not, that's going to happen. And is it about control? And I think it is. I could put on a small tinfoil hat, if you will, meaning that the central bank basically controls almost everything. I mean, if you look at what the Fed does and look at 2008's financial crisis. I mean, the Fed not only bailed out a bunch of, scumbag mortgages, but they also sent a lot of money to Europe. And when I think it was Bernanke was questioned by that, I think a congressman from Florida, they just, really raked him. He asked him how much and why, and he didn't even know how much they had sent. But this is today's modern world banking. Don't ask, don't tell. I mean, we'll just do whatever we need to keep our buddies afloat. And if you keep doing that, eventually you get to probably not a hyperinflation, but a highly inflationary situation where people just don't trust the currency because things just cost too much. And there's other reasons for that, supply chain and curtailment of the foodstuffs and everything else. I don't want to get too detailed, Jesse, but honestly, I do see a consolidation, whether it is contrived or not, doesn't change the fact that it will be consolidated in a few hands, and those few hands will be able to dictate to the masses what they can and cannot do.
So if we're going to see the collapse of regional banks intensify, how should the average person be protecting their wealth? Obviously, converting some of one's capital into sound money in the form of gold and silver, so you actually have wealth that you own and control, seems to make sense. So, what are your thoughts there in terms of how worried people should be about their money in the banks, and how do you feel about going into short term treasuries for yield, as they seem to be offering up to 5% at this point?
Well, first of all, I should be worried. I think that they could relax if they're at the $250,000 mark or less in the United States. I think that the FDIC, even though they don't have the money, will be able to get it. And they have there's a provision that the FDIC could go back to Congress and get another 100 billion, which sounds like a lot of money, but against the amount of debt out there, it's peanuts. So that amount wouldn't solve a 50% collapse of the regional banks. There's no way. But even if that happened, there's still, I'm almost certain, would make good on the $250,000 limit. And the reason is because it's just a computer entry. I mean, it's not like there's any labor involved. So I wouldn't worry too much there. If you're above that, I would be cautious. I would definitely get some sound money in physical, stored at a place you can trust or in your own backyard or whatever. And then I do like the T-bill idea. And I recently, I'm always learning something new. I'm a lifelong learner, never said I knew it all. But in my day, back in the 70s, there were 3 or 4 T-bill only funds. And I can't find one. There may be one out there, maybe someone put it in the comments. There's some that are close, but most of the government only funds are bills, notes, and even long-term bonds. It's some of it, the mix. There is no such thing as a T-bill only fund that I could find. However, there are some that are close. And so that's a good place to go. Go into a money market. Most of those have not only government debt, but they also have some corporate debt or whatever. As long as it's all rated pretty highly, I think you're safe. I mean, let's take a bad scenario, Jesse, and say that you're in a money market fund and its true worth during another crisis turns out to be 93 cents on the dollar. Okay. But if you were in the bank and they took anything above 250,000, you'd be really happy that you had 93 cents on the dollar instead of 0 on the dollar. Follow my drift. So I think it's time to be prudent. And I'm not trying to scare anybody. I'm really not. I mean, I forecast this for a long time, and I'm not jumping up and down with glee that it's happened. It's an inevitability that this is taking place. It's a math problem, not a social problem.
So there's all this talk about raising the debt ceiling, not raising the debt ceiling. I think it's all kind of a charade, so to speak. They pretty much are going to raise the debt ceiling. I don't see any other course of action. I don't see them actually being responsible here. So how does that whole situation end in your view? How does the US deal with a seemingly untenable and growing debt obligation? Are they going to issue a CBDC and somehow reset the financial system to make their obligations disappear? Are they just going to continue down the road and kicking the can down the road? How long can they do that? How does this all come to an end in your view?
In my view, yeah, it's posturing. I mean, we see this almost every time there's a debt limit. When the debt limit was passed in Congress, I kind of ho-hummed it. I thought, oh, what great idea. It sounds wonderful. But they never abided by it. Every time it comes up, they renew it. No, we'll change it. We'll change it. So what's the use even having it? So I think that, they may get down to the last minute and they may even go a few days past it and have an emergency session and make a bunch of hoopla about it. No, they finally caved in and compromised. And now we go, and print up more money as a metaphor. So I think that's part of it. But the bigger question is what you asked, and that is what happens if we run out of road, and we have. I think we've run out of road. So the can stopped, which means if they do increase the debt limit, which is almost inevitable, there'll be more and more, not only nation states, but sovereign wealth funds, money managers, pension funds, insurance companies, individual investors, and just the general public that'll say, aha, they're never going to get monetary discipline. I've got to look after myself, be it, as a money manager, be it a billionaire, a millionaire, or someone with $2,000 saved. and to look after myself, which will take a lot of money out of, let's say, conventional investments and moved into safe havens such as gold, silver, and treasury bills. And I think that's the big thing, because there's $5 trillion sitting on the sidelines waiting for a home. And that home, if they continue to see the dollar deteriorate, will look for something safe, as I just said.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
What do you think the media's role is right now in kind of supporting the government? Because it's not a conspiracy. It's just obvious when you look at the headlines that appear in a lot of mainstream publications. It seems to be like the media and the government go hand in hand in trying to convince the masses that everything is okay. This time will be different. If you go back through history, you see the same thing repeat itself over and over again. So what role do you think the media plays in all of this, the financial media in particular, when it comes to the situation at the moment? And why do people seem to have such short memories that it's so obvious that these people can't be trusted? These central bankers who are in charge can't be trusted. You don't have to look very far back to see they just constantly lie and make mistakes. So why can't people pick up on that in your view?
Well, one of my favorite quotes, and one of the ones I learned early on, was Santayana, and it says, the greatest lesson of history is people do not learn the lessons of history. And that one really hit home for me. Yes, we do have short-term memories. Depends on what your culture is like. Certain cultures have different takes on things and different things that they put as higher priorities than others and that type of thing. But nonetheless, everyone's concerned about their money worldwide. And when we're sitting in a system like this that's basically falling apart in front of our eyes, it's sort of a wake-up call. And yet what you've got the talking heads telling us everything's okay. Bank failure after bank failure, we have a strong financial system. We have a strong banking system. There's nothing to worry about. So they're paid trolls. I mean, they know it. And I put up a Twitter feed, I think yesterday or the day before, Alexander Solzhenitsyn, that said, we know they're lying. They know they're lying. They keep lying. And I forget it was very well done. And this is the world that we're in now. I mean, the bankers and the establishment are lying. They do know that they're lying. And then there's people that believe the lies. And that's where we're at. And it's unfortunate because there's nothing more powerful than the truth. And if we were based, in all of our human relations on the truth, we would have a far different society and culture than we have right now.
Yeah, and not to mention so many of these things are not taught to anybody in school, even the most basic aspects of the economy or of, how to save money, how to, become financially independent. None of that is taught. And if we go down that rabbit hole, I think that could potentially be by design as well. Financial repression is a tool that's becoming more common, it seems, in this day and age, when you look at everything from the Canadian government freezing the bank accounts of political dissidents to the US government seizing Russian FX reserves. Do you think this is a trend that's going to accelerate, almost a new tool that the government is going to be able to start using more and more? And obviously, I would guess you think that makes another good reason why holding physical gold and silver is important.
Yes. I mean, once a trend starts, it continues until it stops. It sounds like, kind of a ridiculous statement, but it actually has quite an effect. So the trend began really with what the United States did to the Russian foreign exchange reserves in US dollars, because Russians could have easily paid what was due others based on the credit debt situation, but they weren't allowed to because their bank account was cut off. That's what's called weaponizing the dollar. At least that's the parlance used by us in the financial world. And that was a big, big mistake in several ways. And I won't go into that, just it's a huge mistake. And then the next thing that was a big one was what happened in Canada with the truckers. And so that trend has begun. Now, whether it continues or not, we have to wait and see. I believe it will. And I believe it'll be more on a minor level, meaning if or when the central bank system is revamped, most likely with the CBDC, and there is a social credit score that's tied to it, whether it's visible or invisible, it will be tied to. You might not necessarily know that it's your social credit score, but the system will, the AI will, however they set it up. And based on you being a good boy or girl, you will have certain limits. And if you are a bad boy or girl, you're not going to have the same privileges. It all come down to what the bankers determine, or let's say the social algorithms determine, for your ability to access your cash. So there's no such thing really as financial independence, other than perhaps stacks of gold and silver. But even in that case, it's not really true financial independence in my mind anymore, because one, it's not easily, transferred in the marketplace. It can be, but it's not easy. You can buy a car, you can buy a house, you can buy an apartment, you can buy a business. I mean, there's lots of things you can do with gold or silver, but it's not common. So that's a drawback. It will become more commonplace with it tied to, the blockchain, which there are many that are already doing that, and I'm involved with one of them. But still, the adoption of that is going to take time. And, is it going to be up and running as a competitor to the new central bank digital currency or not remains to be determined. I doubt it. I want it to, and I don't think it'll go away, because there's a kind of a special look by the establishment toward gold and silver. I mean, it's still an unregulated part of the financial system that's very much dismissed by the mainstream. I mean, you don't get, too much silver analysts or gold analysts or whatever on the mainstream financial press. I mean, when you maybe remember back in 2000, 2010, 11, I was actually on national TV a few times talking about the silver market. But, it's not about me, but no one that I know of, other than maybe Peter Schiff, but he, it's more about the general economy, he often mentions gold, has been on a mainstream channel other than perhaps Peter, maybe a couple others. And all I'm pointing out is that the mainstream does not really advance the gold silver story, because it's not a very much of a churning, CHURN, type of investment. Whereas if you're in stocks or bonds, whatever, you can churn them. You can sell that, buy another one, sell that, buy another one, sell that. Most people that buy gold hold it for one reason, and that's preserve wealth. So if they're going to preserve wealth and they have X amount of gold, they keep X amount of gold, because that preserves X amount forever. And it's not churned. Now, trading gold or trading the paper markets, that's a whole different story, but that's not what I'm referring to.
Do you think that if they introduced a CBDC, that they could potentially try to close the exits to sound money, so to speak, by, for example, heavily taxing gold if you were to buy it in a CBDC, potentially cutting off the ability to purchase precious metals with this CBDC to buy or sell? Do you think there's a way they could do that potentially? Because it seems that you're mentioning it's not mentioned a lot on the mainstream news, and that's absolutely correct. But central banks around the world are accumulating gold at record levels. So at least behind the scenes, they're taking it very seriously, and obviously either considering it as sound money or doing this in preparation for some event. When this is random, but when you look at Japan, for example, they make it extraordinarily hard for their citizens to buy precious metals. They tax gold. If you try to bring gold into Japan, doesn't matter if you have a single coin, they tax it at 10%. They have all these special sensors designed to pick up gold, and yet their central banks are accumulating massive amounts of gold. So it just feels like in some sense, governments may not want their citizens to have that exit hatch, that access to sound money. What are your thoughts there?
Well, one, you can't rule it out. And two, Japan's not the only one. To add on to what you said is, when the first question about, silver, I mean, I was thinking, didn't voice it, that, in so many parts of the world, there's a VAT on silver that doesn't exist on silver.
Yes.
I just have one of my friends from Great Britain who's a silver nut like me, but he had to pay a huge value-added tax to make a silver purchase. So there's a much more discouragement about buying precious metals generally than most people know if they're in North America. Secondly, there's actually more discrimination against silver than there is gold, and there's some against gold, as you just mentioned. So would they or could they tax it or make it tougher on people? Yeah. Again, I'll repeat, you can't rule that out. However, there is a free market. It's called the black market in onerous times, and that is you and I make a deal, and you keep your mouth shut, and I give you 3 silver coins, and I get 6 months of oranges, whatever. But that will go on. That cannot be stopped. In fact, that's what sound money is really all about. Is it's peer to peer. It's the ownership theory of money. And there's very little talked about the ownership theory of money, but the adage that as precious metals nuts talked about, if you don't hold it, you don't own it. That comes back to the ownership theory of money. And if the ownership is at your bank, they own it, you don't. And that's why it bears repeating that, you're an unsecured depositor if you're a U.S. citizen and put money in. There's many other nation states that have the same law on the books, that once that deposit's made, it's actually the bank's money, not yours. You have a claim on it. But the bank can say, well, your claim is we bailed you in, and here's your stock certificate. And when that has happened, and it's already occurred, happened in Cyprus, for example, and a couple of other places, that you got your money back about 5 cents on the dollar. So again, going back to being in like the money market fund, and there is a bail-in, you'd be happy to get 93% of your money. And I'm not saying you're only going to get 93%. What I'm pointing out is as this financial system continues to stress and more failures happen and more sound investments turn out to be unsound, and the counterparty risk accelerates and people cannot make good on their promises, you're going to see a further contraction. And when that contraction happens, it will affect, for example, a money market fund. So I do think that the banks may not even bother putting up some type of tax or thing, because one, they're going to need it, in my view, to come up with a system that people trust. And that would kind of be hard on themselves, because people will be so upset by what happens that anything they do further could cause, as an example, a riot. I don't want to be too extreme here because I try to stay in the center of this situation. But for the banks to say our gold is exempt from this tax, but you, the gold holders that saw this coming, are penalized for that, I don't think that'd fly. So personally, you asking me, I'm sure a lot of my peer group will disagree. No one knows the future. I think they just let it lie. I think they would perhaps leave it alone. They're very good at trial balloons. They're very good at looking ahead, and they're very good at doing tests. So they'd probably leave it alone. Then they might try a test. Let's test Argentina, and we'll put a tax on Argentina and see what those people do. Oh, the Argentinians, let's try it on all of South America. That's how they operate. I mean, I said this years ago, I have not said it publicly in a long time. If you really want to figure out the banking system, you got to think like a criminal, because that's what we're doing. We're dealing with a criminal enterprise at this point. And the only way to, let's say, I would say outthink them, but at least get into the same modality that is required to get a clear picture, you do have to think like a criminal.
Yeah, and that sounds like an extreme statement, but when you actually look at the history and look at the facts, it actually isn't. It's actually quite in line with what these people are actually doing. So I wanted to end on Bitcoin. I know we don't usually discuss crypto, but I wanted to hear that there's some rumors, talks. I know you've posted about this before on Twitter about the connection between Bitcoin and Mastercard. So maybe you could enlighten us to what you think that connection is, and maybe where people could find more information about it.
You bet. Well, I met a guy named John Perez a few years ago now, and he was giving me a lot of information about Bitcoin. I didn't blow it off because I'm too open-minded, but I was skeptical. And the more I verified what he's telling me, the more he was right. So I made this decision that, sometimes timing's everything, right? At least that's the adage. And so I said, it's now. No one's talking about the other side of the coin of Bitcoin. Everyone said it was going to 120,000. It's decentralized, it's private, it's this, it's that. And there was a lot more to the story. So I took on the other side of the story. And on my website, themorganreport.com, the blog section, there's 29 or 30 crypto conspiracy podcasts. And if you go to the blog and you type into the search bar, because there's a lot of stuff on the blog, crypto conspiracy, it'll bring up all 29 or 30. Number 14 is the one that you want to listen to, because that was with Kurt Wuckert. So anyone that's on my free mail list, my free email list at themorganreport.com, sometimes you get these emails, and I'm one of them, and you just, you delete them because you get so many. You don't want to delete this one. It'll probably come out within the next 2 weeks. I will send you Kurt's write-up. It's called The Mastercard Bitcoin Conspiracy. It's quite a long article. It's in a PDF. I'll post it for everyone that's on the free list. But he goes into how Mastercard basically usurped the system of Bitcoin, and explains it better than I can. He's also in that interview. Number 14 was an interview John Perez and myself interviewed Kurt, because we made a lot of assertions. We based it on facts that we could find, but he's the master. He's an archivist for the Bitcoin world, and he really knows his stuff. And so we brought him on to kind of like, support us or not, were we right or wrong, Kurt? And he basically verified everything we had and gave us more information. So yes, MasterCard is in control, you can put that in quotation marks, of Bitcoin, but certainly they have a lion's share of what goes on. And this is something that I pretty much forecast. I didn't use the word MasterCard. When I wrote in 2014, I believe, my 2 bits about Bitcoin, I said the bankers are not going to give up the monopoly. It will not. And so if Bitcoin becomes ubiquitous, everyone wants it, it's, the new currency, whatever. I'm kind of misquoting myself, but said if it becomes so popular, watch out. There'll be regulations, the bankers will take it over, or they'll make it invalid, whatever they want. They are not going to lose control. And that's, of course, what the CBDC is all about. It's about centralized control, not decentralized. And it's about power. And it's about keeping their situation in actually for them, an easier format, because if there's fewer banks to mess with and all that. On the counter side, give some people some hope. I mean, what's going on with JP Morgan is quite interesting. I mean, Jamie Dimon made a trip to China. That's pretty interesting, And then the Chinese, as we talked about, with their renminbi and gold purchases. Now, it looks to me, and I've only done a cursory look, that it's going to be digital based. Whether they take physical metal off the exchange and put it in the bank or in a depository or not, I don't know. I hope that's what happens, because that will certainly put pressure on the gold market in a real way. But on the silver market, it's been something I've studied for years. The amount of silver that's in the registered category is roughly 30 million ounces. I've seen that happen a couple of times before in the last 20 years or so. In both times, it only stayed there briefly. And then from wherever or from why, whatever, we saw an increase in the silver supply in the registered category, come back up to 40, 45, 50, went on. This time, it's not happened. It's as if the amount of silver that's left just is getting small, and probably even smaller. And silver will follow gold, as I said earlier. Gold is going to lead, as I said earlier, and people really need to put their house in order. One of the main things you can do if you're, not a saver or not an investor is just look at your debt situation. The best thing you can do in a situation like this, where we have stagflation, we don't have just inflation, we have some deflation, so we have to have a new word, stagflation, is to get out of debt. Leverage works great in a highly inflationary environment, or an inflationary environment where everything's working and the debt markets are perfect or near perfect. When you have banks failing and the debt system is being questioned daily, and this debt is being collateralized to pay depositors, in other words, you've got a bunch of long-term bonds and you got to discount it to the market to get the yield of 5%. That means you got to take the price of the bond and give it a big haircut. And you do that so you can get cash, and you get cash because you have to pay cash to the depositor. So there's a lot going on. It's going to be more and more interesting. It's not the end of the world, but you can see it from here. And I think it's going to be a lot of reevaluation, especially in the West. It'll be worldwide, but especially in the West, of what real value is. And real value comes much more from here than from
Well, very well said. And on that note, it was great having you on, David. I will put a link to the Morgan report below so people can check that out. And always awesome chatting with you, and look forward to doing it again in the future and getting an update.
Great. Thank you, Jesse.